Hi, I'm Jeff Hirsch. I'm here at the Money Show in Seattle with Jack Roberts, the options trading specialist at simplertrading.com. And we've been chatting about what they do there. They have a trading room and they give advice. So, but you have certain types of options trades that you like. You have a certain style that you. So, what the types of trades do you put in there? Just vertical bull call spreads, covered call writing, or what's your thing?
Absolutely. So there's about three that I stick to. Mm-hmm. Selling put credit spreads at the money, especially if we're in something like what John Carter has.
Selling put credits at the money. Quick. What explanation of what that is?
That's basically a vertical to the upside. It's a defined risk trade. So if you get a 1-to-1 risk ratio, you know that your max loss is, let's say, $250 is your max loss and $250 is your max profit. Okay. And so what I'm doing is I'm safe emotionally to know that it's a defined risk. You know what you're going to
lose and you know what you're going to win.
That's right.
Somewhere in between there.
Somewhere in between there. And then also I like to stick with my 50% profit rule in high volatility markets. In other words, I want to take profits and be nice to myself and pay myself before I'm forced to do something else.
So you said something about butterflies when we were talking before. Is that another strategy you like to use?
Yes. So mainly on the SPX or the spiders.
What's a butterfly?
The butterfly is going to be a low-risk, high-reward trade where you're buying.
What are the options that make up a butterfly?
So you've got a call in the middle, and you've got two of those. That's on the outside. You've got both calls on the outside, and usually mine are about $20 wide. So basically, what you're saying is.
So you have three options in a butterfly?
Correct. Yeah, and then you're
all calls.
Yes. And so what we have here is a situation where you're risking a very, very small amount of money to make a greater reward, and you're just basically, you can take advantage of volatility and going a little bit wide. Like for example, right now I've got a spider or an SPX trade that expires on Wednesday. Mm-hmm. It's $20 wide, and we're pinning that at $28.75, and that's a very strong level on a very technical.
$28.75?
Exactly.
The line on my chart.
That's right.
On the S&P chart. So that's based upon your outlook or your setup is that you think the market's going to go, the S&P is going to go higher, lower?
Well, I think right now it's very hard to say which way we're going to go. I think we're going to be talking about chop for the next couple months going into fourth quarter.
Yep.
And so I think that's
seasonal period as well as overhanging pressures from the geopolitics and underlying support from the economic fundamentals, I think.
That's right. And we don't want to risk too much.
So it's kind of like a straddle.
Exactly.
So you think we're going to be bouncing around 28.75 for a while?
I think so.
Okay. You have another live trade that you like right now, looking for this summer period?
Absolutely. And this one's a little bit longer dated. What I'm doing is I'm shorting the euro. So basically through the FXE, which is the euro ETF.
The currency shares.
Mm-hmm.
Right.
And so right now we've seen it climb back into 107, 108 area. And now what I'm doing is just building into my position because inevitably in the next year or two, Europe is going to slow down.
So the S&P trade was kind of like a butterfly, right?
Yes.
And the one for the FXE that is
buying puts. So buying
buying puts.
Absolutely, building into that position just to write it down because I feel like our next level is going to be 105 and 106.
Versus that spread that you were talking about, the put spread.
Correct. You could do a put spread, absolutely, or you could do a call credit spread, something like that to the downside. But generally, what I'm doing with the currency ETFs is playing it pretty aggressively, but in a later dated expiration.
Basically, shorting it.
Shorten it.
Short the euro.
Short the euro.
Straddling the S&Ps right now.
That's right.
All right. Thanks very much, everyone. Thanks again, Jack.